Alright, what's up guys? Welcome back to the channel. Today is Sunday the 2nd of June, and it's been a few weeks here since I pumped out a video. So therefore, we got a whole lot to cover. So the agenda for today, I'm going to give you all a quick update on the Big 3 squeeze. We'll talk a little bit about my small account, which I've grown from 2,500 to 25,000 plus over the last 5 or 6 weeks. Then I want to show you the monthly squeeze setting up in the S&P 500. And I think there could be a nice Lotto trade somewhere in that monthly squeeze. Then we'll take a look at open positions, give you guys a few names off the watch list, and then you can move on with your Sunday. Alrighty, let's dive in. Alright, so quick update here on the indicator. For those of you with the indicator, for those of you interested, I am going to push an update here sometime this month. So sometime in July, you'll get your newest update, and the update will include the Big 3 squeeze. So we have the modified version of the squeeze. The histogram, we got the sell signals and the buy signals plotted down here. And then the star of the show is going to be the squeeze labels. So the combo that I'm looking for is a squeeze and a Big 3 buy signal or a Big 3 sell signal. So for UMP here, the blue, right, the 2-day chart, the daily chart, the 4-hour, and the 30-minute, that means you have a bull squeeze. You got a squeeze and an active Big 3 buy signal. So that'll be in the next update, and yeah, I'm loving it. It's everything I wanted from the indicator. The squeeze tells me we're gearing up for a move. The buy or the sell signal tells me path of least resistance. So now for a name like UMP here, on 1, 2, 3, 4 different time frames at once, I've got that bullish combo. You got 4 squeezes building up energy, gearing up for a big push, and the buy signal tells you pretty good probability that squeeze fires to the upside. So keep an eye out for that. And then as far as the small account here, guys, like I mentioned, I am going to do a video kind of covering every trade, going really into depth here on the small account. But for these small account trades, all I've been doing is the Big 3 squeeze. All right, I'm doing swing trades off of larger time frames. I'm doing 5-minute squeezes, 15-minute squeezes for day trades. And I am being pretty aggressive with the position sizing. Aggressive with the position sizing, but even more aggressive with the risk management. So I started the account on the 17th of May with 2,500, and we got about 24,000 here profits so far. So keep an eye out for that video. And the goal here, guys, is try to run this up to 100,000 plus. 100,000 plus of profits this year. So keep an eye out for that video. But with that out of the way, Mama Market. Mama Market looking very bullish here. So last time we spoke, or the last few videos that I put out there, we kept on covering the that nested squeeze setup here in the S&Ps. They had a daily bull squeeze. That daily bull squeeze was nested inside of your 2-day bull squeeze. That bad boy was nested inside of your 3-day squeeze. And all that action, of course, has taken place here inside of that weekly squeeze, which as of now has fired to the upside, and we are only 1, 2, 3, 4. We're only 4 weeks into that squeeze firing to the upside. The general rule of thumb once the squeeze fires, we're looking for 8 to 10 bars of momentum. So in other words, that weekly squeeze might have a little bit more gas in the tank. But as far as a bigger picture setup here, now here's the key, guys, right? We've got to be able to talk about the potential for things like this, and then just continue to show up Monday through Friday and trade the charts in front of us. So point being, I'm not going to marry this idea, and if I wake up on Tuesday, or Wednesday, I guess, the market is closed on Tuesday, if I wake up next week or the following week and everything just kind of shits the bed, all right, we got sell signals for breaking structure, I'm going to get short the market. All right, when the pretty colors, when the structure, when the indicators tell me to get short, I'm going to get short. So I'm not going to marry this idea, but here's what I'm seeing. So over here on the monthly chart, you'll notice back here in COVID, you had the big COVID flush, but frankly, the COVID flush didn't really kill your trend. All right, didn't kill the trend, it didn't kill the structure. All you really got was a move down to your monthly 50. We then printed a monthly squeeze, and then that squeeze slingshotted right back into the range. You took out your highs, and off she went. A monthly slingshot squeeze. So this most recent pullback from the 4,800 highs to the 3,500 lows, it kind of looks all the same. You didn't kill the uptrend. We didn't break structure. We didn't get a monthly sell signal. All we kind of did here was pull back to the 50, print another monthly squeeze, and for now, guys, the squeeze here looks like a slingshot. All right, squeeze prints. They drag the price lower. They take that bad boy like right to the very edge of potentially firing short, and then snap right back into the range. From here, that squeeze could fire to the upside and take out the highs. And here's the thing, it's a monthly chart, right? It's a little bit slower, it's a little bit bigger, but I would look at the monthly chart the same way I would look at a 5-minute, a 15-minute, or a 30-minute chart. All right, just judging that pattern based on the structure, the indicator, the signals, the squeezes. If this was a 1-hour chart, for now I'm looking at a 1-hour uptrend that pulled back to 1-hour support. We have a 1-hour squeeze, and now the structure here looks pretty good for that squeeze fire to the upside. Like, to me, that doesn't change whether it's a 3-minute time frame or in this case a monthly chart. Now the other thing here, as far as the big 3 indicator, there's 2 parts of the equation. There's the structure part of it, then there's the momentum part of it. As far as the structure goes, everything's already lined up. So the only thing keeping us here from getting that official monthly buy signal would be a positive shift down here in momentum. All right, the structure is there, the trend is there. The only thing missing to kind of kickstart that next push would be a little bit of momentum. But yeah, guys, for now, I think there's a really good chance that over the next 2 to 3 to 4 to 5 months, you see this squeeze take the price back up here to the previous highs, through the previous highs up towards 5,000. So on the S&P here, or the SPY rather, as far as a lotto ticket kind of idea, what I'm trying to buy sometime this week would be the December quarterly expiration. So December 29th expiration, and I'm looking for the cheapest calls possible. All right, let me see here. All right, so this is kind of like the neighborhood that I'm going to focus on. You go all the way out the money. These 525, 530-ish calls, like something in that range, I'd like to try to buy them for about 10 to 20 cents. And I don't think the strike matters too much. If it's 520, if it's 530, I don't think too much of a difference maker. But again, the key here is I want to try to buy them for 10 or 20 cents. And then the thinking is pretty straightforward. Right? I'm going to allocate an amount of money to that trade that I'm not going to stress. So for me, the number might be $4,000 bucks. Right? I'm going to buy $4,000 worth of these cheap out the money calls, and then I'm pretty much going to pretend the $4,000 bucks is gone. I'm not going to stress it. I'm not going to babysit it. The money is gone. And then, of course, the thinking is, well, hey, into July, August, September, if in fact the monthly squeeze here works as advertised, and we slingshot to the highs and through the highs, those calls are going to explode. So then one thing that we can do here on the theoretical price tool is say, all right, in the event, as we're rolling into September, if the S&Ps here are trading up around that $500 level, these calls that are currently going for 15, 20, 30 cents, they'll be going for like $5 or $6. So it's a complete lotto idea, but at the same time, I don't think all that unrealistic. You have an uptrend, you have good structure, you have a huge squeeze, and then from an average true range perspective, right now your monthly average true range is like $40. So for the month of July, if the S&Ps have an average month to the upside, that takes you right back to that 480. Like you're knocking on the door there of the previous highs. if we put in another average true range the following month, we're through that 500 level. So again, it might never happen at all. The market might totally just kind of, throw in the towel next week. Maybe everything kind of goes to crap. Or you're looking up in 2, 3, 4 months, and that weekly squeeze got the job done, took out the highs, and we're trading through 500. So the same way that I would trade a daily squeeze, I'm going to try to build up my position before the squeeze fires, let that bad boy run, and as you can see here, there's some pretty juicy potential. The key again is you don't marry the idea of that trade working, and you accept the max loss. Set it and forget it. Now, a big part, I think, of actually seeing the S&Ps move towards 500 would be Apple here. So check out the monthly chart for Apple. All right, this is the biggest stock in the world on the biggest time frame in what is my opinion the biggest setup possible. Monthly bull squeeze. So on Friday, the monthly chart here for Apple officially got that buy signal. So from here, guys, this is no different than any other time frame. Get a squeeze, printing an active buy signal. There's a really good probability that squeeze wants to fire to the upside. So then think of the domino effect. All right, Apple is your most heavily weighted name in the market. Just by default, if Apple can fire this monthly squeeze, that's going to send the S&Ps and probably the rest of the market to the upside. All right, think of like a basketball team. Apple would be Michael Jordan. If Michael Jordan's playing its ass off, it's good for the whole team. So that I think is like the biggest and the baddest setup in the market right now. This fires to the upside. Apple's blowing through $200. We're probably going to head up here towards 220, 225. And again, by default, you get that kind of explosive move from Apple. That's definitely going to nudge the S&Ps here back towards those highs. And then where I think it gets more interesting is we're starting to see the breadth across the board really improve. So one example would be the Dow Jones. Now, Dow Jones isn't as sexy as Apple, Microsoft, or Nvidia. But if we are trying to see the S&Ps back to the previous highs, the healthier the market, the better. So for the Dowski here, you got this bull squeeze on the weekly chart. And if that fires to the upside, that's going to help the S&Ps. And another thing you can look at here is the equal weighted index, the RSP. Check out the RSP. If the RSP fires the weekly squeeze to the upside, signs of a healthier market. Signs of that continued improvement in the breadth. All right, all of that kind of goes a long way here to push the S&Ps back towards those previous highs. You got things like the industrials. All right, again, the industrials not that sexy, but there's one pocket of the market outside of technology, outside of the semiconductors, that does look poised here for a pretty good push. You've even got the IWM. IWM has a weekly squeeze, and we have a daily bull squeeze. So if IWM can fire its daily squeeze to the upside, if the industrials can fire their weekly squeeze to the upside, if the Dow can fire its weekly squeeze to the upside, all of that goes a long way in terms of carving out a path here for the S&Ps back to their previous highs. And again, the biggest part of that, the biggest source of ammunition, I gotta think is a monthly squeeze here in Apple. So that is what I'm seeing bigger picture, guys. Again, don't marry that idea. And frankly, my only focus is just, waking up every day and trading the good setups in front of me, whether they be bullish or whether they be bearish. But for now, I've got to look at that monthly squeeze in Apple. I got to look at that monthly slingshot squeeze in the S&Ps. And think for now there's a pretty good chance that's where we're headed. So that is what I'm looking for, bigger picture. And then as far as a couple open trades here, heading into tomorrow, we got some calls here on Microsoft. So Microsoft is setting up in a brand new daily squeeze. We got buy signals on the 2 hour, the 1 hour, and the 30-minute time frame. Not too shabby. So for Microsoft, we're looking for a push here back towards 350. Got some Microsoft, and then we got some UNP. So UNP is an industrial stock, and I just showed you the weekly chart in XLI. And this one's got some good nested squeeze action. 30-minute bull squeeze, 4-hour daily, and a 2-day. So from there, you look for that domino effect. If the 30-minute squeeze can fire long, that could trigger the 4-hour squeeze. 4-hour squeeze could trigger the daily, that could trigger the 2-day. And all that squeeze-on-squeeze action should take you back here towards 210 to 215. So we got some Microsoft, we got some UNP, and then one name that I do like here off the watch list, which I don't think is exactly ready just yet, but I am keeping a close eye on it, is Google. So speaking of that slingshot squeeze, you kind of got the same dynamic setting up here on the Google daily chart, where the squeeze prints, they rip the price lower into the 50, so they kind of take the squeeze to the edge of potentially firing short. So now from here, if Google can get back above that 122, and then if back above that 122, our 5-minute chart, our 15-minute, our 30-minute, our hourly, our lower time frames start to trigger that buy signal, then I think there's a pretty good chance there that daily squeeze wants to fire long for a push back towards 130-ish. So we're liking Google here, and then Amazon. I'm not going to chase Amazon, but I tell you what, if this does pull back to that 21 EMA, I would look for a trade here in that daily squeeze. And from there, you're looking for a push into a brand new high. So there you have it, folks. Giant monthly squeeze setting up an Apple, a monthly squeeze and a buy signal, and then not too far behind it, you got the S&Ps doing very much the same thing. So my thinking is, hey, if this all kind of unfolds, we should continue to see a really strong market. And at that point, our only goal should be, just fully capitalizing on that move. And then in the event that all kind of falls apart, and everything just becomes bearish again, we got to switch immediately. Alright, just keep on trading the setups in front of you. But that is it for today, guys. As always, I hope you find it helpful, and I will talk to you in the next one. Adios.